Good morning. Retail performance in 2025, a sector that defied expectations. In the U.S. retail sector entered 2025 facing skepticism, and headlines focused on store closures, retailer bankruptcies, and a slowing labor market. Yet by year end, retail emerged as one of commercial real estate's top performing asset classes, outpacing expectations and attracting renewed investor capital. Strong consumer spending, accelerated leasing activity, and historically constrained new supply, as well as improving investor sentiment, combined to make the second half of 2025 one of the strongest retail periods of the past decade. And consumer spending anchored retail stability, and consumer spending remained the foundation of retail resilience. And retail sales increased approximately 3.5% year over year, supported primarily by higher income households. Importantly, middle and lower income consumers maintained employment and modest spending growth, preventing a broader pullback in physical retail demand. With cooling inflation ending the year near 2.8%, that helped stabilize purchasing power. And this moderation allowed retailers to regain confidence in brick and mortar locations, reinforcing demand for well located neighborhood centers, grocery anchored assets, and service oriented retail. And leasing activity accelerated in the back half of 2025. And retail leasing momentum improved dramatically in the second half of the year, with early 2025 experienced negative absorption driven by bankruptcy related closures. Vacant spaces were rapidly backfilled. And retail move ins reached their highest 6 month total since 2022, pushing median lease uptime down to a record low 7 months. With fewer announced closures, the pipeline of future vacancies fell to a 2 year low, an important signal of improving tenant health and market balance. Now, new retail supply remains historically constrained. Retail development remains one of the most supply disciplined sectors in commercial real estate. Construction starts fell below 43 million square feet, while completions remained under 55 million square feet, marking the weakest development cycle in decades. And elevated construction costs, zoning challenges, and tight financing conditions continue to suppress new supply. And for existing owners, this dynamic supports occupancy, rent durability, and long term asset performance, particularly in high growth Sunbelt markets. So rent growth slowed, but remains structurally healthy. National retail rents increased 1.9% year over year, reaching a record of about 25.69 per square foot. While this marked the slowest pace of growth in more than 10 years, the moderation reflects normalization rather than weakness. In southern markets, led rent growth at 2.3% and was driven by population inflows, income growth, and household formation. And since 2019, retail rents in the South have increased approximately 28%, which is reinforcing the region's long term investment appeal. Now, investor demand returned in force. Retail emerged as a preferred asset class in 2025 as investors rotated away from challenged office and oversupplied multifamily sectors. More than 66 billion in retail assets traded during the year, which is exceeding transaction volumes from both 2023 and 2024. Pricing reached a record $142 per square foot, supported by consistent NOI growth and limited new supply. Entering 2026, competitive bidding and improving financing conditions suggest continued upward pressure on well located retail values. And that's all according to analysis and analytics from CoStar. Now, bottom line for investors and owners, retail exited 2025 with strong fundamentals, disciplined supply, and renewed investor confidence. While challenges remain at the tenant level, the broader sector has proven far more durable than expected. Now, for investors, business owners, and lenders, retail's performance underscores a key takeaway headed into 2026. And that is, well located, necessity based retail is no longer a recovery story, it's a stability and pricing story. That, my friends, is it for the day. Please visit my website, houstonrealestatebrokerage.com. Love to chat with you a little bit more about whatever your situation is. Take care.